then becomes, and this is a good lead in to our tip number 2, is should I put my spouse on payroll? Now, a lot of people think, oh, I better put my spouse on payroll because if I don't, they are not going to get Social Security. That is wrong. That is a lie. And so in our example here, if you can spotlight me again, Michael. So we would go, and now our example starts to get some legs on it. We're going to have our S Corp here, or LLC taxed as an S Corp. And I'm going to actually make a little note to my assistant over here. Hey, can I get some more water? Thanks. Kirby, my PR manager, she's awesome. We're right next door. We're here in Phoenix, so there's some palm trees out here. I apologize. I am headed to the slopes in a week. But
I can't wait to see you up there.
Is we're going to take a W-2 for the owner. That would be you. And your profit comes out as a K-1. We've already covered that. Well, what should I do about my spouse? I'll just summarize in this. Your spouse gets what's called the spousal benefit for Social Security no matter what you do. Legislators 30 years ago, 40 years ago, came up with the spousal benefit for stay-at-home moms and stay-at-home dads and said if the breadwinner goes out and makes a bunch of money and this stay-at-home spouse does not, they should still get Social Security. So if you start putting them on payroll, you have to make up for 30 years of the income, half of the income that your spouse would have earned. You got to go above that before their Social Security would increase. It will cost you so much in FICA that it is not worth putting them on payroll. So do not listen to anybody that tries to put you on payroll or your spouse because you need Social Security. It's an incompetence right there. So when do you put your spouse on payroll? There's only 2 reasons. One is for medical. We'll come to that in our tip number 5. But the most common is, I want you guys to set up a 401k. And this is a solo 401k of which you get to be the trustee. You can buy real estate. You could loan it out in hard money or notes. You could even buy crypto. You could buy anything you want in that solo 401k. And you get to dial it up or dial it down. And if the company doesn't match, you're the only employee. Now, for those of you that have employees, we would do a safe harbor 401k. The deadline for that was in October. So we'll address that next year as you stay in touch with Michael and me. But here, right now, before year end, if you set up a solo 401k, the government gives you $1,500 over the next 3 years. $500 you get $500 literally given to you to do this, plus you get a tax write-off to do it. We charge $1,000. That's the same price we've been charging for the last 4 years, $1,000. You're the trustee, and then we can choose how much we want your spouse to get paid so that he or she can fund their 401k. Let's say you go, oh, Mark, I'm going to put in 10 grand in my solo 401k. I want my spouse to put in 10 grand too. Well, then we put him or her on payroll for 11 grand, pay their FICA, put 10 grand in the 401k, zero out their W-2. You just got a write-off for 11 grand and they ended up with 10 grand in the 401k. So we can manufacture more wealth to build real estate and get a tax write-off to do it and get a tax credit to set it up. They're paying you to do this because they know Social Security is so jacked up. So this solo 401k, our deadline internally to get the paperwork done is the 15th, 5 days from now. So if you're catching this December 15th, because the IRS shuts down on December 26th for maintenance. And if we don't process your paperwork to the IRS by the day after Christmas, you're SOL.
Hold on, Mark. Saying the IRS shuts down for maintenance, isn't that kind of like saying they're taking a teacher workshop day so the teachers can work? I mean, isn't that when they just go do fun stuff with their own kids?
Yeah, it's a hard thing to justify, but when you're thinking, okay, let me see, their computer system is so out of date.
Yeah.
Anytime they take off to work on it, I'm kind of happy. But
You're not wrong. Real quick, we got a couple of quick, or actually on this topic, we've got a question from Eric Anthony, great guy, by the way. Eric asks, what if your wife is not stay at home and she also makes $100,000 or more a year?
Okay, this is a great question. Okay, so we're going to go next level, everybody. Okay, so here's our trifecta. You've got an S Corp. You're doing your W-2 in K1. Your spouse has a W-2 up here. You say 100 grand. Okay. Typically, that spouse is going to have a company 401k. And the company 401k, almost 95% of them around the country, do what's called a 3 or 4% match. So a 3% match on your salary if you put it in. If you put it in, we'll match it. That means 100% return. We love that. So we're going to go and say, all right, if your spouse is not stay at home, but they've got the salary and they've got a 3% match, we want them to put in the 3 grand and get the match. Thank you. And now your 401k at work just doubled. Not a bad rate of return, but then they're just going to invest it in Wall Street, something you may not be excited about. So you're like, that's okay. I doubled my money. I'm already ahead. Well, this year you get to contribute up to $23,500 if you're under age 50. So your spouse that's staying home said, well, I just used 3 grand of my 23. So I've got $20,500 that I could still play with. People, you can have multiple 401ks. So you set up a 401k, put your spouse on the board of directors, which is tip number 4, where you're going to have your board of directors, board of advisors meeting. So you've got your board meeting coming up and you compensate your spouse whatever you want. This is so audit proof. It's not even funny. So you say, well, I'm going to pay my spouse 10 grand for serving on my board of directors. And you give him or her another W-2. So they have their day job W-2. They have a second W-2 for 10 grand and change. And then you say, let's put 10 grand in this 401k. So they put 3 grand in here, 10 grand in here, and you got a write-off for it, and they paid no tax on it. So now you're doubling down. This is where we start to teach the mega backdoor Roth 401k, because now we're going to stack. We're going to put your Roth IRA in here. We're going to put the deferral amount in here. We're going to put the company match, because here in your business, you get to match your employees and you choose 25%. So you put away 10 grand and then the company can match his or her 401k, another 2,500 that goes in the 401k, and you get a write-off for that. So now when it comes time to buy a rental property next year, you've already got 20, 30 grand sitting in a 401k to go buy a rental property. That's the magic there.
That's huge. Thank you very, very much for that. And by the way, what's the big advantage? And this is something I think a lot of people also wonder about. Why buy the real estate in a 401k or in a self-directed IRA instead of just buying it straight up?
Well, there are several reasons. So we go back to our trifecta. We're not going to worry about this side. So now we've divided your life into 2 sides. This is your asset side. So you've got a rental property over here that you bought for 500 grand, and you just kicked out some kick-ass depreciation of 160, right? We're back to that example. Mm-hmm. And so that's cool. But when you do sell this, if you don't get creative, you could have depreciation recapture. You would pay tax on the capital gain. You got to get creative on this because you've ripped out all that depreciation. And if this property goes up to 750 in the next 10 years or more, you've got a built-in gain that you've got to deal with. But you got all this depreciation. So pros and cons. Well, if I go over here and fund a 401k with 50 grand between mine and my spouse's income, and I got 50k to play with, I go form an LLC and buy another property for 500 grand. I used 50 grand here, bought this property in my own LLC name, and then I bought this one right down the street. I got a twofer. And I buy this one with 50 grand down, and I buy this one. Now, pros and cons. I can't take the depreciation, but guess what? I will never pay tax on the gain or the income ever. And I'm going to get a better ROI than some stupid ETF in Wall Street for 8%. Because I know I'm going to have a cash flow property paying down the mortgage, growing to 750 grand. If they grow together in the same perspective, and I've got all this cash flow over the years, it all goes tax-free back into my 401k. So Here, I get the depreciation, but got to deal with the gain. Here, I don't get the depreciation, but I never have to worry about the gain or the cash flow. So you're hedging. You're getting two buckets built. So in my book, when I say buy one rental property a year, once everybody gets on board with that, I go, well, I hate to tell you, you're going to buy two. You're going to buy one in your retirement account based on tax write-offs you generated inside your 401k, and you're going to buy another rental over here with your leftover money that you didn't pay tax on, and now you've got two buckets growing simultaneously. People, this is how the rich get richer.
Dude, that's insanity. That's absolute insanity. I love it. All right, real quick, Sean also asked, great question from Sean. If you're doing the S Corp retroactively, then do you include your income amount on the W-2 for the whole year or just the December amount?
The whole year. Because what we want to do is grab that entire year of income, because remember, you're going to pay self-employment tax on the entire amount. I don't want to just make it an S Corp here. Holy crap, I want to go grab the whole year. And I want to say all this income, no self-employment tax. I'm going to pop it into my new S Corp. And this is so allowed, so common. Freaking Joe Biden had an S Corp in 2016, and he had a book deal for $12 million. He took payroll of 800 grand. I mean, his payroll allocation was like 2%. So everybody does this. It's clean. It's not high risk. In fact, I reduce your chances of an audit. So you want to go retroactive, grab the whole year. I could go on and on.
I love it. I love it. Good stuff. Okay, I think we're ready to go to your next one.
Club Wealth is the only coaching company on the planet that will literally guarantee that you will double your income or make at least an extra $100,000 your first year coaching with us, or we will give you 100% of your investment back. Click the link below, sign up for the appropriate tier level, and let's get you a strategy session today. And I promise you, I 100% guarantee you, promise you that you will walk away with a heart full of gratitude for the time that we took for you, because you got so much value out of that call. Schedule your strategy session today. I promise you'll be glad you did.